New GDP numbers show the U.S. economy grew by 4.1% in the second quarter of 2018. That is the fastest growth rate since 2014.
The economy has been growing for 9 years, which is the second longest period of growth on record. Katia Dmitrieva is an economy reporter for Bloomberg, and she joins us now from Washington. So, Katia, tell me about whether or not the Trump administration's trade policies actually contributed to this surge in the GDP growth.
Yeah, you're right. The 4.1% number was pretty robust, but not as high as expected. We were looking for 4.2, according to economists. And we did see some impact in that number from trade specifically. So we've been tracking for some time in surveys and in manufacturing data and in sales data that people were front-running the tariffs. There's a lot of concern about tariffs, so people were stockpiling. So if you look at the net exports number, you'll see that it contributed about 1.06 percentage points to that GDP number, specifically in oil and agricultural goods. So as we've been hearing a lot about soybeans as well as other exports, it looks like people were stockpiling on these items to prevent any kind of impact from any tariffs. First, it was just concern. Now there are actually tariffs in place. So we saw that in the trade data.
So, Katia, what you mean by what you're explaining to our audience is by using the term front running is that people are actually worried over the long term. They think that these trade tariffs could actually hurt the U.S. economy. So while they stockpiled over the course of the last quarter, leading to this perhaps 1 percentage point extra that we saw in the GDP, going forward in the next couple of quarters, we could see a drop.
That's exactly it. So while the 4.1% number was robust, economists do not expect this to last. So we know President Trump is speaking in about 15 minutes, talking about these GDP numbers, which he just tweeted about, saying they're blowout numbers, just like he said last night at a speech. He mentioned 5.3%, in fact, last night. So this is not that. But this will not continue, because if you have this impact not only from trade and people who are stockpiling and kind of juicing the numbers, but you also have the impact of tax reform, which is going to slowly fade out throughout the year. So in the second half, economists are not expecting it to continue, even though in the first quarter we had a raft of revisions this morning that we were sorting through, and it looked like GDP growth was actually 2.2 instead of 2% in the first quarter. The silver lining here, and something really interesting, is that consumers have a lot deeper pockets than we thought. So consumer spending picked up more than expected in the second quarter, I should say, and also savings rate. People are saving more than expected, something like 7% it was revised to in the first quarter, which was also unexpected, but a positive sign for the economy.
Okay, so then what can we expect sort of looking forward in terms of economic growth for the rest of 2018? And what sort of factors do you think will have an impact on the economy moving forward?
So consumer spending makes up about 70% of the economy. So that is definitely a good sign and should keep the numbers in the green. But again, what economists are expecting, what we're expecting at Bloomberg, is that we will see a bit of a slowdown. And the big question is the tariffs, because if this uncertainty persists, you might continue to see people stockpiling and buying items. On the other hand, if the tariffs go in, you'll see a lot more expense for companies, so they're not going to be buying as many goods. We don't have any solid expectations yet because there are so many uncertainties for how much it could shave off of GDP. But we know that it won't be coming in at this sort of high 4, mid 4 levels.
And Katia, the other thing that I think it's important to point out is just in the same way that folks were stockpiling certain goods because of these trade tariffs, there's generally an assumption that if the economy is doing well, that will lead companies to invest more, they'll hire more people. But because of the concerns that you're raising here, we haven't seen that kind of activity from corporate America. And so I wonder if you're seeing the same data and what that could mean for the third quarter, which we'll report right as we go into the midterms.
Yeah, so you spoke about hiring, and there's actually not that many people left to hire. So if you look at the unemployment rate, if you look at jobless claims data, which we had yesterday, still sitting near that 5-decade low. So the pool is really small actually right now for hiring. So companies, to your point, are dealing with a lot of costs right now. So not just the added tariffs, but also the fact that they have to pay people more. We haven't seen that robust growth, but that's part of the reason why we might see some investments slow down, because companies need to allocate costs. They're going to be investing in people to keep their companies running. That means higher wages. We saw a lot of bonuses at the start of this year when that tax reform came in. So we can expect to continue to see people getting paid more as this economy sort of enters the late cycle that we're in.